Welcome everyone to the morning brief on Friday, June 19th, or Juneteenth, as it is now more commonly known as. This is our masterclass on disciplined investing, where we're going to learn to invest with military precision. Our mission objectives today: grow our money, protect our money, and live off our money. And we're going to talk about that through the lens of niche ETFs out there. And at the end, we're going to cover how these ETFs actually work, which is still pretty confusing on how they actually function, but we're going to talk through that. So when you think in relation to our objectives, there are ETFs out there to help grow our money. We're going to talk about focused ETFs today. So we're kind of talking about the growing part of the objectives out there. There are objectives out there to protect our money. One of which we'll take a look at is called hedge, which obviously is a way to hedge against that. Or we talked about SH in the past, which is a short fund, which also, if you have a portion of that can help protect our money. And the last one, there's live off our money. There are several dividend ETFs out there that if you are looking to maximize the amount of yield you get off your portfolio, you can use those. NOBL is one of them, Noble. That is the top 25 best dividend aristocrats out there put into one fund. So you can accomplish all three of your objectives with ETFs, but today we're really talking about growing our money. For our flow today, we're going to go long, short, open, short, long. We'll go around the world with the market review. We'll talk about today's headlines, and then we'll go into our long-term investments. There's the ETFs we'll talk about today, three of which I'm in, three of which I'm not, but we're going to talk about all of them and also take a look at a seventh one that's out there as well. We'll get into some short-term day trading opportunities about 10 minutes before the open, and then we will go through the execution of that, and then we'll transition back to our question and answer session after I talk about the ETF specifics. There's the contingency, steve@ototnow.com. If you have any tech issues, that's monitored real time. And the standard disclaimer: this is a financial education presentation, and you have to use your own discipline before you do your own due diligence before you take an investment based off anything we talk about here. Okay, let's go ahead and look at the TD Ameritrade platform or think pipes of where we've been over the past year. You can see the big move up there in February, dropping off like a rock there to COVID-19, and then the move back up. The important part is we're still kind of in that up channel trend. We gapped down yesterday, but actually finished up on the day from where we opened. That's why you see the green candlestick there. So kind of in the heart of that channel, if you will. Could really go either way from here, but currently in an uptrend, and then we have a couple of big headlines that are going to come into play this weekend. So we'll take a look at those. Okay, let's go to the next chart. It's a little focused in on the actual action in the SPY here over the next few days. So there's where you can see yesterday we were gapping down in the red and then kind of popped up there throughout the day. So really when you're backing it up 3 or 4 days there, we aren't up to that high of 317 almost. We could hit there today though. You can see that we're up over 1% across the board. So kind of a good news Friday. So I'm a little surprised by that. I thought there would be more concern in the market over the Trump rally this weekend, but so far we haven't seen that. And hopefully that holds. Okay, I did not see anything of note out of the earnings that jumped off this morning, so we will skip that. Let's go over to cnbc.com for a round the world review. So here's what we've got for I said we're above, up 357 there on the Dow. So pretty nice across the board and pretty even, if you will. When you go over, take a look at Europe, same thing, up over 1% basically across the board. Going over to Asia, same thing, not quite as high up in Asia, but everything in the green across the board there. And let's take a look at yesterday's action. The Dow finished in the red slightly, but it was kind of a positive run into the finish, which gave us that green candlestick yesterday, kind of setting us up for the good news Friday that we have. Over to bonds, the 10 years up slightly, nothing of real significance, if you will. Oil, though, check this out. How long have we been talking about above 40 on that price of oil? So again, the OPEC and compliance and everything they've kind of been talking through, that's very helpful for the price of oil to be now what I call in the normal range. We'll see if it holds. But again, a normal range now is 40 to 60 is really what you're looking for there. Okay, over to precious metals. Up across the board, so a lot of money flowing in. So when you see everything up, I tend to think in terms of money flow. So you'll hear me talk about that on occasion, and I need to actually do that as a topic one day to really get into the specific indicators. that are out there. But the money flow is kind of, if you think money's like water, it has to go somewhere. So when they're selling, like there was in March, there's a mass sell-off. A lot of people went to cash, and then as people sit in cash, you get penalized for being in cash, right? Because you're losing out to inflation, you're losing purchasing power. So from a money flow perspective, cash can slosh back into the market, and when basically you see everything across the board in green, that's just buying. It's the opposite of what you saw in March. Where we are in the market, is it right for people to start putting the money to work at wholesale here? I would say not necessarily. I think it's time to take a hard look at what's going to happen here in the next 5 months and go from there. But that's when you see even the precious metals up, it's kind of crazy. It's like, okay, people are now just looking for stuff to buy out there. Okay, let's head back over to the main page, and we will go through some of the headlines that we have today. Again, Juneteenth, so social unrest. This is, we'll have companies basically, you know, from a market perspective. You see Bezos put out his comments there. You also, Tim Cook put something out earlier, again, CEOs of Amazon and Apple. And hopefully with, you know, their words of wisdom as well as some of the money's donating to the cause, hopefully that helps to have the social unrest, you know, subside a touch as there's more awareness as to what everybody's feeling out there. So you have that from one side. So that may be the good news, feel good, everything goes up on Friday, maybe even a rip your face off Friday that we've seen lately, that sort of thing. But also there's the Trump rally on Saturday, which if anything happens at that Trump rally, there's going to be protesters. It's a 18,000 person venue, and they had like 1 million people request. So I think some people will be making the pilgrimage there. So that could turn ugly. And if it turns ugly, I think then we will see a huge hit over the weekend, even up and including like a limit down type of the scenario on Monday. So kind of crazy. I don't want to like be the chicken little there saying that's going to happen. I'm just saying that there's certainly a potential, as I kind of mark the Trump rally personally as my personal transition as an investor into election season. So I've been talking to a lot of folks this week about it. There's some moves I'm going to make today to go to safety a little bit, not across the board, but a little bit. And then on into, we'll see how it plays out from there. When you see that, first switching to a different topic now, we're truly getting to a place of moral hazard. David Tice is a investor. This is where I will tell you the bears always get their moment in the sun, is even though they've been dead wrong for like forever, right? And this guy's basically talking his fund. He runs a hedge fund, which is HDGE, called Hedge. So of course he's going to talk about, I mean, it's all that ever comes out of his mouth is gloom and doom. So it's kind of, it's hard to believe these guys. So when I see stuff like that, it's like, who's David Tice? And I look him up and it's like, okay, well, of course he's going to say that, because he says that like 365 days a year. But we will actually take a look at his hedge fund, and a little later, not right now. When we get into ETFs, I'll pull that up on FinViz and kind of show you some funny stuff about it. I think you'll find it interesting. Okay, so you see the futures higher and the oil above 40. Today is also what's called the quadruple witching hour, where all the options and all the futures 4 times a year, there's 4 specific Fridays that are the witching hour Fridays, which are generally high volume days, as a ton of options close out today. I've got several out there with today's date on them, so I have to watch that closely as things get managed, because we've talked about the max pain point and sometimes how options can almost be manipulated. That's a negative word, but market action can be driven by where the options prices kind of average out to. So you can see some weird stuff on days like today. So we shall see. All right, let's scroll down a little bit. We know about the coronavirus cases spiking. We're now into that second wave. We don't know really how much that's really going to affect anything. That's more of a wait and see. I think the India-China conflict's a nothing burger. Honestly, that's just, I mean, there's been stuff going on there all the time normally. Apple got a big upgrade in that next analyst call, and so did Ulta. I didn't see the other two, but I'd imagine those are upgrades as well. The big deal with Apple is, 5G, new phone coming out, back open, stores open. I just think it's going to continue to print money, but I've believed that for a long time. Okay. Alibaba, there was some good news on, it was like a singles day. It was going to be in November, but they had another day, a June 18th day, 6/18 day yesterday, obviously. So they got a lot of sales out of that, which is a good news story. Okay, let's scroll down. Yeah, the housing market's doing fine. Not too worried about that. Yeah, you might have seen this morning as far as running mates. One of the, I would say, names I was watching was Amy Klobuchar. She pulled out and said that a woman of color should be the vice president's, or excuse me, Biden's pick for vice president, which is kind of interesting because really out of the front runners, that takes it to exactly one name, which is Kamala Harris, which again could be good, but there's also risk with her. And my personal belief is there's too much risk and that she will not be the choice. Again, the out of left field choice that would pretty much guarantee not only a Biden win, but a blue wave is if Michelle Obama was put on the ticket. Again, I think that is the biggest no-brainer on their side if they would do it. But we'll see how the Democrats play it out there. Okay, and scroll down a little bit. And keep going. Wirecard, if you saw any of that, they're basically going to go under. Accounting scandal, CEO just quit. They lost 1.9 billion euro. That's a payments processor in Europe. I think it's Germany specifically. So that's it for the headline review. Before we go to the Schwab board, pull up FinViz and we'll look at hedge. This is the one I was talking about with David Tice. So you can see that since you can't short in a retirement account, and a lot of folks have money in qualified accounts like the retirement account, you run into situations where people create ETFs to be able to take it the other way. We talked about short SH, right? So that's one of them, and then hedge is another. And look at the performance on this thing. Basically, 750 down to below $5. You see an ocean of red there on the right. So really kind of no good news here. And that thing's been kind of straight down, except for, if you held it, if you switched over to March. That's it. I've got these names in my cross check now, so there may be some time to throw some money into this if we think the market's going to sell off hard going into the election. So it's a tool in the toolkit. I don't know how often I would call its jersey number though to put in there, but it's there and we shall see. Let's scroll down a little bit. I want to show you something. If you're truly wanting to be an individual stock junkie, stop right there. If you go back up, I'm looking at the right side. Those are the Najarian twins. Right below that, you see Drew the Glue 2. Right there you go. So look at some of the comments that Drew the Glue 2 has. It's hilarious. So this is what's called stock twits. It's basically a Twitter for individual stocks. So if you if you want to follow what everybody's saying out there, and I think these are actually clowns, but it's somewhat entertaining when you research a stock to flip down there and see what people are saying. This guy's hating on hedge pretty hard. It's like, don't you have something better to do? But we talked about the articles on the left. I do go down to the articles fairly regularly, especially if somebody's right around earnings or something, to look up for some information. So let's bring that down. Let's actually just switch over to the funny ETF names tab that I found. So it came out with amusing ETF ticker symbols, a couple of which we'll talk about, but Barn is a farming ETF, Angel for the Fallen Angel ETF. That's again, companies that have gone from investment grade to high yield or junk, if you will. Again, that's at BBB is the lowest rung of investment grade. So when you talk about, if you hear that term Fallen Angel, it's the Fed talking about buying individual stocks that have fallen from investment grade. So that's your fallen angel things. Boil for natural gas. I mean, these are just kind of hilarious. Cafe for coffee, Cane for sugar. You can see some of the names there. Crop, that's kind of funny. Go ahead and scroll up a little bit. Dirt is out there. It's kind of funny. Earnings per share, that's one of those if you're trying to be looking for buying value investing, you could use an EPS fund. I'm more growth oriented normally, so I don't use that, but it's kind of interesting. There's Joe, I thought was funny, another coffee ETN for a cup of joe. Okay, scroll up there. We'll finish these off. So put 50 at the bottom. Tan is one we'll talk about, or 46 there. Tan is one we're talking about today. And then I thought the China bear, you have yin and yang. It's kind of funny. So, and Vroom auto ETF. I did look out there. So we'll keep it on this screen for actually go over to the Schwab screen while I talk about this. So opening an ETF is kind of like opening a hedge fund. When you honestly think about how the industry works, it's kind of crazy. And you hear like 90% of hedge funds fail. And I will tell you that literally you can register, that you can do this from your garage or your home office. You can register an ETF or a hedge fund with very little paperwork. You can stand it up, you market it on your own, money flows in. You manage it exactly within your prospectus that you obviously have to produce and send out to everybody. And that's it. I mean, literally, these things can be very small and still survive. And in cases where it doesn't work, like if I opened a hedge fund and put all the same major stocks that I have in there, I put them in a hedge fund. If it goes, I take a whole bunch of. This is why most of them fail. Is you take a whole bunch of risk your first year, and if you hit some home runs and you outperform the market significantly, then a bunch of money flows in. And then that party lasts until you have a bad year. And then the money flows back out and you scuttle your hedge fund. Literally, if it was, OTOT hedge fund, and then I would switch it to OTO hedge fund. And literally you can scuttle your ETF and the same person or the same group of 5 people can scuttle that one and open another one like the same day. It's crazy. So when you think these hedge fund managers are actually bouncing around, and all they really need to do is hit a good home run, and that gets enough money flowing in to keep it going for a while. Or somebody like Einhorn that's now lost money for like 3 years in a row is still around as a billionaire playing this game. Same thing for ETFs. If you want to register an ETF, you can. I have had people ask that, since I tend to design portfolios kind of based around the same names and then supplement the edges basically on risk, is could I do that as an ETF? And it's like, I certainly could. And I did look up some interesting things. MAX is available, Max, and Burner, BRNR, is available. Just thought that was funny. Not going to do it. Just funny. Okay, let's take a look at the big board here. We have 6 names up there. The first 3 I'm in. So Hack is cybersecurity. Off to the right is eGaming Hero. Then we have iBuy, which is e-commerce, if you will. Think Amazon and everybody else like Shopify. Cloud is one that Predator brought up yesterday, as well as TAN, that's cloud computing, and then solar down at the bottom. And then the right one is bottom right is Glitter, which is all of the precious metals, which is kind of interesting. So we'll talk about these individually. So first of all, for Hack, this is cybersecurity. There are a couple other names out there. If you want to, let's real quick go over to the, bring this down, go to the ETF.com page. I want to show you something real quick. If you want to learn about ETFs, there's ETF.com and then you slash, we'll leave TAN up there. But this is just ETF.com / the ticker. And as you scroll down a little bit here, you'll see competing ETFs. You have SMOG and FAN. FAN is a wind one. You can read all about it's about 4 pages of stuff. And it tells you the expense ratio, so 0.71 for TAN. Scroll down, there's some individual holdings, and this is where I kind of like to surf sometimes. You can keep going. It's down a little bit. You'll see it. You'll see a big bold headline at the end. It'll say individual holdings, which is next one. Keep going. And keep going. Making a liar out of me. Sorry, stop. It's at the bottom right there. There we go. Stop. Up a little bit. There is the top 10 weighting there, that 62%. Scroll down just a little bit so we can see that a little bit more. Keep going. Okay, and one more. Keep going. All right, there's the top 10 holdings right there in the middle. So you see Solar Edge and then First Solar. And then when you look at the top 10 weighting, 62% of TAN is in the top 10 holdings. So fairly focused, right? And that's what, if I did an ETF, that's kind of what it would look like, because I'm really kind of focused to outperform in certain areas. So it's interesting though. This is where I can go if I'm trying to find. So you think, do I get the ETF or do I go best of breed? Well, I immediately go to the, if I'm trying to figure a best of breed, like in the marijuana MJ, or if I try to go into hack and try to figure out who's the best of breed, I'll look at the top 10 holdings. And obviously I can tell that the pros in here think that Solar Edge is best of breed. But maybe not. It could just be undervalued and positioned for an upturn. So anyhow, that's where I surf for best of breed. And if I look at it and I don't have anything jumping off the page at me, then I'll say, fine, I'll just buy the ETF, which is what I do with Hack and Hero and iBuy. So that's where that information is if you ever want to look it up on your own. Okay, we can get back out of there and go over to Schwab again. Okay, so hack cybersecurity. I think Palo Alto is the best name in the space. FireEye's #2, but there are literally a ton of names out there. So when you look at hack, you know it's already recovered and more from the big downturn there. To the right, and again, the theme here is at least the three that I'm in for sure are all work from home, COVID-19 themes, right? Cyber hackers are probably going to be out more, and people are now in home offices. So you have people trying to turn their home office into bank level security, which I already had mine there. But for your big companies like UBS they send all their workers home, and then now they have to start working with VPNs and cybersecurity systems in place. You know, a big deal, right? Same with Hero off to the right, which is a new one. A new ETF started in last November or December. That's why its chart looks a little different than everybody else's. But again, a work from home, you know, hey, let's have everybody, gamers. It's like gamers paradise, right? Can't leave the house anyway. There's some other names out there kind of funny. Espo's another one I use. There's also Gamer, and there's also Nerd is an ETF. I thought that was funny. Middle left there, that's iBuy. That's predominantly companies like Amazon, Shopify, names like that. Again, that has been killing it since work from home environment, right? Cloud computing is another name that is significantly beaten where it was back in February. So when you think of the things going to the cloud, again, the home office, now everybody's working in, secure cloud files that you have to pay for. I use box.com myself. Lower left is TAN, that's solar. Not necessarily I buy the long-term theme, but so that's why I'm not invested in it. But certainly, if you're a big believer in the cost efficiency of solar power, then that would be a place to put your money. And last one to the right, you've heard me talk about GLD for gold in the past, or SLV for silver. Those are the only two I've ever been in and out of. I'll take a look at glitter though. It basically, it's all the precious metals put together. So it's kind of, gold, silver plus, right? So really pretty interesting there. So, okay, let's go to the next tab and we'll start talking about some short-term names. That's an interesting comment there about COVID, CVID. Okay, let's talk about who we have. I don't have any names on my chart because I was busy studying ETFs this morning. So I will try to pick up some of these names on the fly. I'm refreshing the market on another screen here. So we're still up over 1%. And it's actually increasing a little bit, up to 1.4%. So again, it'll be tough to find shorts in this environment, but we'll see what we got. Urban One's been in play. I wouldn't touch that. There's two tickers there for Urban One, and the K is a preferred share. I certainly wouldn't touch that for day trading purposes. DraftKings, lots of volume, but hardly moving. Okay, let's look at the top 10 gainers. All right, Cohen and Company. I think that's Steve Cohen's hedge fund. I don't know, but we're not going to touch it up 150%. Let's see. Nothing else is moving up in the range that has the 100,000 volume. So let's look at the short. Pretty light volume in the short world. That's ETF. Okay, let's look at the next tab. Go to Chesapeake's bouncing. CHK, check that out. It's fifth one down there. Pull that up on the left. Gapping up, closed at 13 up to 1430. Again, they're talking about they're in bankruptcy. You're talking about it. Continues to be half. Nope, that's a lawsuit headline. Don't know why that's gapping up. I wouldn't touch it. If anything, that would be a short. AMC's getting propped up as well. Again, I would not touch that as because it's going into bankruptcy. Let's see. Marathon Petroleum, MPC. Let's take a look at that. Again, with oil now above 40, I could see a lot of money flowing into the oil names today. So this would be a long, closed at 39 up at 42. So that's kind of interesting. A lot of hope in the space for talks ongoing. Oh, that's right. They have Speedway under their name as well. Click on the gapping up there on the left. See if other names pop up. Put KMX up top. I'm trying to think what KMX is. I recognize it, but I can't remember it. Oh, that's the CarMax. Okay, I don't necessarily know why that's popping up. Let's see. So earnings, revenue beat, recovery. Don't really like it. We'll monitor it. I'm not going to take it long, but interesting. It's gapping up a couple percent, so nothing huge there. All right, back over to the other screen. That's the ETF. So let's look at that Two Harbors investment, see what's going on there. Okay, dividend, big increase in their dividends. So TWO long, kind of like that with the market going up. Don't know much about them, but it's a pretty decent move up there, and they were up around 550 a few days ago. Back that chart out to like 20 days or so. Okay, so they're up at 660. So I do kind of like this. I think that will, I don't want to short into this market, so I'll look at that for my long here in a second. All right, Predator threw some names in there. Delayed interest payments on their bonds. That's generally a bad sign. I don't know why Chesapeake would gap up on that. Let's look at SWI since I'm not familiar with it. Unless that's Smith & Wesson. Nope, Solar Winds. Nope, that's not it. SWBI. So there you go, Smith & Wesson brands. Oh, I kind of like that short too. It's not really gapping down, but it's certainly run up so far. 2.8%. Yeah, we'll keep an eye on it. It is risky with the money flowing in, and again, it's the ETFs. And when we talk about the buying of the ETFs later, I think you'll see how they get overly affected. So I'm going to take TWO. I'm putting my trade in now. Go ahead and look at that other name, Work. TWO long. Okay, Slack short. They got cuts to sell on Microsoft Teams. Yeah, I mean, Microsoft Teams is a heck of a product. So anyhow, we shall see. Go ahead and set up the, we got 1 minute to go. I need to get my trade in. Go ahead and set up the TD Ameritrade board. And you can put in SWBI left, put TWO in the middle. Thank you. Already there. So I need to set my stop here. 526 up to 536. That'd be a 10-cent stop. Is safe, long. So 10 cents. And I want to go in at 3. Actually, I want to go in at 1, out at 10. Just kind of ride the wave higher if we get one. So that's my trade. TWO long, again, know nothing about the firm, so that's a little sketchy. Let's put SPY off to the right instead of work. There's the open. We'll put SPY off to the right instead of work so we can kind of monitor that. Man, pretty decent move down there on both of our trades initially there. Taking some notes to myself. All right, I would say I'd be in at minute, what did I say? I said 1, right? So I get wherever that's going to be a nice setup for me on TWO in the middle there. So we'll draw on my chart first, since I'm in at the 1 minute point here in a few seconds. So 516 is my entry point. So my lower stop's going to be down at 506. And again, this is long. So I have plenty of room there. So my 3R would be up at 546 off the top. So, that's what I'll be looking for. So we'll see that. That's pretty big stop there. So I'd be shocked if I get knocked out of that, but stranger things have happened. Move down in the market's not too bad. I'm on another screen, kind of refreshing what's going on in the bigger picture with the long-term stuff. So yeah, still up over, hanging out above a percent, but it did give a little back there in the first minute or two. Not too worried about that. Breaking news. Yep, Dow up over 300 for 4th weekly gain in 5 weeks. So long-term stuff has been working. Okay, we just got the entry on Predator 1783 on a SWI. You were right, actually, there, the 1788 or 89. Yep, I agree. Yep, good catch there. And again, this is SWI short, so we've got a 20-cent stop. So 1789, that makes it what? Or 88, it would be 1808. It would need to hold. And already busted out of that. So yeah, it's just it's so tough and to take a short in a market like this. We'll see if it ends up selling off over the day there. And you're going into the, if something does cook off at the Trump rally, again, Smith & Wesson, American Outdoor, and then there's a Ruger, RGR. Those are names that they're almost tradable around potentially negative events like that, because people are out buying weapons, so they'll buy the stock too. All right, let's take a look at some other things. We can come back to SWBI in a minute. Let's look at MPC long. Okay, the good news price of oil, boy, that would not have worked. It opened up, I think it was around 9% up, and then it's basically gone down to 6% up. So could you take a trade here for long? I probably wouldn't in an oil name. Kind of like the setup for a long, but I wouldn't take it. So we don't need to zoom in on that. CarMax, KMX was another name that we looked at long. Same thing, that's $2, $3 move to the downside. So profit taking there, that would not have worked for sure. And then let's put work in on the left and see what that's in. All right. So again, work was a short. It actually set up pretty nice right there at that 3270 level. So if that's one of those you were watching there, Predator, if you got that entry, you wouldn't have been able to take it right there, but probably as it dropped down to around 3260 or so, you could enter. Or if it stays around this 3250 to 60 range, and the market starts to sell off and you have a short thesis in play already, you might pick up might sell some shares here short, looking for it to drop throughout the day. So, all right, let's see what else we have to take a look at. Let's take a look at CHK. Again, I'd imagine that had to sell off at the open, and it did. That was kind of overly optimistic, right, of a company going into bankruptcy. That kind of gapped up there. So that would be a fill the gap strategy, would have paid huge, easily a 3-hour move there if you took that at minute, either 1 or 2 or 3 or at the open. But again, that's a fill the gap strategy. We don't generally do that. But that's one of those, it's like, how in the world could people be putting money into Chesapeake right now? Let's pull up AMC. I bet we see the exact same chart. I'd be shocked if we didn't. So yeah, kind of overly optimistic there. If you took it at the open, you'd be in money. If you took it here, you don't know. You'd have to wait for a little while to kind of see how it actually plays out. And then what's our third bankruptcy name we always look at? Chesapeake, AMC, and Hertz. Thank you. Oh yeah, so there you go. There's the big Hertz sell-off. I had this, so let's see, 185, it's 10-cent move down. So 1 R, it's hard to get multiple R's unless you go with the 5-cent stop out of a stock that's down at $2. But yeah, who's going to buy Hertz? I mean, I don't see anybody. Maybe the Robinhood team. There's a speaking of Robinhood, since they've been in the news lately for what's everybody buying. There's actually an app called Robin Track that downloads hourly what the entire Robinhood book looks like, and that's how people are getting this information. So that's where when like Kramer was on last night saying if these folks don't be careful, they're going to get killed, because they went heavy into airlines and cruise liners, of course, and they made some money. But how often does the retail investor actually take the money off the board and book it and move on to something else? So but so far, yeah, Robinhood, the team has been right as far as making those big trades, but that's how that information's out there. I did not check out the app myself, so I haven't looked at it. Okay, let's look at LK. So I've been some good news up in LK. You can see pre-market, it went up to 14 or 414 or so. It's hanging out above 4, so that's kind of good news. Most of the entry points that I've had are down below 4. So if you have that name in your portfolio, that's good action. And again, Luck and Coffee, they got accused of fraud. They fired their CEO, COO, chairman of the board are all gone. It's a restructuring play. There is talk of the Chinese stocks getting delisted, but I don't think that's going to happen. I think Trump has enough on his plate to not fight that battle. But individually, LK is going to get screened to be delisted. But if it gets delisted, remember that just moves to over the counter. It doesn't mean it stops trading. So, not the end of the world if it gets delisted. It's kind of a non-issue. It's an ugly headline, and there'd be some selling. But once after that, then I think there'll be smooth sailing. They still have 7,000 storefronts in China selling a high margin, highly addictive product. Okay, let's check out a couple of EV names. Let's check out Nikola, NKLA. Okay, I think this one is overvalued personally where it's at, but it's also a kind of a cult favorite, just like Tesla. It's sister stock, if you will, so it's hard to get in here and short anything. Another EV stock that's been on fire is NIO, NIO. And again, actually zoom out on this chart a little bit, hit the 15-minute. This stock was down at 5. You can actually go out a little bit more to show how far the stock has come. Yeah, so yeah, this thing was at $2 not too long ago, and it's up at 7 now. Again, trust in a Chinese EV name, there's just a lot of faith you have to have in it. They have like 200 electric vehicle companies. People have argued NIO's the best, but it's hard to say. But anyhow, if you've been in that name, I do have a touch of it, but it's such a small stock. I don't have enough that's actually to move the needle, unfortunately. Okay, and then look at Ford on that left screen. And we can zoom back in. You can go back to the today 1 minute. So it's another name, a lot of good press out for Ford as far as what they say they're going to do with the Mustang Mach-E, the self-driving. There's an autonomous pickup truck plan that's out there. I think that's just because Nicola's talking about the same thing. So Ford's like, yeah, we have a plan with no details to match up with that plan. But so we'll see there. Let's go ahead and put, you stopped out on CWI, so it actually worked from your entry. So for Predator, that's pretty good that you get 2 hours. Oh, you lost 2 hours because of the stop issue. And yeah, you can elaborate that if you feel like it. She did get 3 hours in pin, so let's pull pin in that left screen. Pin Gaming is a gambling name. All right. Let's see, did you take it short or you were delayed entry long? Feel free to elaborate on that if you want. Okay, my trade just closed out. It closed in the previous bar, so up at 538. So 538 in at 516. That's 22 cents across the board, 10-cent stop. So 2.2 R. In the real world, I would let that ride. I don't have any reason to doubt it here and take it off the table early. Now, when you do see 6 or 7 straight bars straight up, a lot of people will take the trade there and kill it. That's no reason to concern. It is going to probably come back down, 4 or 5 cents or so before it can resume higher. It can't just keep going straight up forever. So I wouldn't be worried about that. Got in at 33.11, out at 33.71. Oh, very nice. So yeah, that's a good entry there. So again, being patient out of the gate. We're talking pin now on the left, being patient out of the gate, watching it fall from 33.55 at the open down to 33.10 or so, all the way down to 32.9, right? So striped all the way down for that entry. So you got to wait till it comes north. You can't take it down at 32.9. You have to wait till it gets north of at least 33.10. You snagged it and rode it up for 3 hours. So nice trade. Okay, over you see the SPY starting to sell off a little bit. So let's refresh in here. 250 up on the Dow now. So maybe our Friday euphoria is not going to hold. Let's go to the left and we will take a look at the long names on the watch list. Bunch of options moving up. Shroom F again, and MMEDF. Those are psychedelic names on the move. NIA, we already talked about. Target, got some good news there. Again, they were the ones out with the $15 min headline. So again, from a business perspective, minimum wage headline. So that's from a few days ago. So from a business perspective, that's obviously increased expenses. From a good news, goodwill, good employer perspective, that's a good news story. FireEye, we talked about earlier today. That's bouncing around up there. Micron's a name we talk about regularly. NS is New Star. That's bouncing around. Let's see, CGC, Canopy Growth, that's a marijuana stock. So it looks like the psychedelics and the marijuana and STZ, which is Constellation Brands, that's an alcohol stock. So the SIN stocks are up. XLE, that's your basic sector ETF for energy. That's kind of been on fire. It roughly tracks the price of oil. So you do, when it tanks, it's gets significantly undervalued. So for those people that are sector investors and have all 11 sectors, then you'll see that that's why you have that, because it bounces up nicely from there. All right, let's see what's on the ugly side and in the red. Options, Clickstream, that's a penny stock. That VCBD, again, is a psychedelic or a marijuana. It's a psychedelic with the CBD ticker. O, Realty Income. Gosh, only a handful of names in the red. Those are real estate investment trusts. Is VTRO, Stag, Doc, all real estate investment trust names. And then that is it. Okay, Nothing really to watch here. Let's go to the Chrome and pull up the ETF Investopedia page. And while you're kind of processing that, I'm gonna look at the question we have years ago, sector rotation. It's okay. So I was reading Predator's question there. If he's talking about sector rotation, yes, there. I don't know if Fidelity still has those funds, but the X series is your 11 sectors. We just talked about the XLE, XLK is technology, XLV is health, XLF is financial, XLRE was the 11th one. There used to only be 10, but XLRE got listed last year. That's for real estate investment trust. For a sector rotation strategy, you're generally doing kind of like a dogs of the Dow strategy. Is you look at whatever the three, the dogs of the Dow, they say strategy, and that's easy to kind of think of conceptually because there's 30 stocks in the Dow. You buy the lower 10, the bottom 10 performers, and it's more of a reversion to the mean value-based investing of the fact that since those are out of favor right now, they'll come back in favor. Same thing when you're talking about sector rotation. Whatever sector's out of favor will eventually come back into favor. Now, if you believe that, that's fine. You can execute that easy enough. Where I think that kind of falls flat, if you will, is like the XLK, which is the technology sector. And you just can't beat technology. Now, obviously, when technology sells off, it sells off very hard. We saw a crash back in 2000. But when you're talking high margin, easily expand when you create a software and you propagate it out, right? So, I mean, just really printing money in a lot of areas. So I would say where like XLB, which is the building and infrastructure, or XLI, which is industrial, I don't think those names in a sector rotation space would ever be the right name to buy against technology. But certainly when energy goes out of favor, because energy tends to normalize over time, I could see buying XLE when it's undervalued and then coming back up. As far as, and it's certainly those are trades, that's not, or they're swing trades, they're not day trades. Swing trade means hold overnight all the way up to about 9 months. This is kind of standard definition of swing trade. So if you're trading through earnings or trading through an event like an election, that's a swing trade. Is I'm going to set the portfolio up. I know that I'm going to relook the portfolio after the event. So that's built in. So the names I'm buying now, so for those that I'm taking risk off for, I'm using SPXB, which is an S&P 500 bond fund. So overall, it's about a AA, so super high investment grade, pays 3%. I know I'm putting that in place now, but I also know that I'm probably unwinding that position in December after not only the outcomes of the elections are known, but we're starting to get more verbiage of what life is going to look like. So more of the swing trade there. So good question. We can go ahead and bring that down. Okay. Lot to cover on this ETF page, so we'll go through it nice and slow. So it's tracking an index, again, of individual stocks. If you go to ETF.com, which we're not going to go back there, that it tells you how many stocks are in, how many holdings they have. And most of them, I would say, are between 30 and 50, especially for the niche ETFs, because there's just either not enough names or you still want to focus on best of breed. Instead of if it's active, it'll focus on a best of breed. If it's a passive, it'll just own every name in the entire space. So like MJ is a marijuana ETF that is passive. So if you have anything to do with marijuana, then you're going to go into that ETF, and it makes no attempt to pick the best name. There are other active ones that it does try to make that. So you need to know which one you're in, either passive or active, and there's more of that out the bottom. Okay, it's a marketable security, meaning it's listed and it's bought and sold during the day. If you remember mutual funds, which again, you had individual stocks and bonds for years. And then in the 80s is when mutual funds got popular. They existed for a long time, but they got popular in the 80s, and they kind of, the 80s finance world went crazy with it and started charging, well over 1% for most of them. And some still have 1% plus kind of management fee, pretty high. and then there's all kinds of inefficiencies with buying and selling mutual funds. And they only remarket one time a day. It's at 5 o'clock Eastern, so an hour after the market closes when they mark the market on the day. The exchange traded funds are actually traded during the day and traded on an exchange, and they're a little more tax efficient, which we'll get to that. So it's a basket of securities. I'm at the key takeaways now. If you want to follow along, they fluctuate daily. It's a buy and sell sort of thing. Excuse me. It can be any of the holdings there. Now this one's just wrong at the end. ETFs offer low expense ratios. That's true. And fewer broker commissions than buying the stocks individually. That needs to be updated, obviously, because we've gone to a zero commission world. So that is actually inaccurate. So you could now pop open, and I would tell, when I talk to folks, I'm like, hey, if you like a mutual fund or index fund, let's go take that thing, crack it open like an egg, look at the top 10 holdings and cherry pick the best out of it, right? You can still do that. Or you could buy all 37 holdings if you felt like mimicking the mutual fund without paying the expense ratio. And again, the ones we talked about, the 6 that we had up there, ranged between 0.5 and 0.7% for paying for that privilege. So if you're talking big numbers, you can just go do it yourself. And obviously you don't know their turnover and when they're moving in and out of names, but you can closely replicate it if you're so inclined. Okay, let's go up to the cash invested in ETFs chart. So you can see they're overwhelmingly popular coming out of the global financial recession. Now, I don't really hear anybody under the age of 40 talking about mutual funds at all. The mutual funds that I have are just left over from, I have so many capital gains in that mutual fund that if I sell it, I'll have to pay taxes, and I don't want to do that. So you just hold it, which I hate to do, but that's kind of what you do when you're stuck for taxes. Okay, let's scroll up to the next new screen there. Put the types of ETFs at the top there, and we'll talk about, we talked about the first 4 already, and then the bottom one is the inverse ETF. Again, that's that hedge, that's a SH. There's all kinds of trading vehicles. You have Dig and Dug that we talked about. We have UGAS, DGAS, you have Yin Yang. So there's basically a couple ways to play it there. There is a note there about exchange traded notes. That will be a topic for another day, but most of your trading vehicles are actually ETNs and not ETFs. And there's a big warning that goes with that you just should not hold. You can hold an ETF forever. If you have an ETN, it's a trading vehicle for a specific move in the markets. You don't want to hold it forever. Okay, let's talk about how to buy and sell ETFs. Okay, so this is what's kind of interesting. So it's an exchange traded fund. So unlike a mutual fund that actually has to buy and sell the shares, and then at the end of the year, they give you a distribution, which can mess up your taxes, especially if you've been right up knocking on the door of the next higher tax rate. It can really, it'll put you in a newer tax rate. And it's like, well, I didn't want that. Now, obviously the tax rates are marginal, so you're going to lose a little bit of money on whatever, the extra increase in taxes. But a lot of times those tax rates are a fence to where other things, if you're in a certain tax bracket, other perks along the way, their tax breaks, tax credits actually fall off. So there can be other penalties for this surprise distribution. And if you remember back to mutual fund days, you get these things like on December 18th. So ish, right? That halfway through December point, and all of a sudden they dump a large capital gain on you. And the worst case was in a year where you had a lot of selling, like 2007, you could have a mutual fund that is in the red for the year. They give you and people are actually obviously redeeming shares, which is causing more of the capital gains to accrue because it had run up from 2000 to 2007. So you can have a mutual fund that loses money, like 5 to 10%, and then you get a whole bunch of capital gains. So it's like, I've lost money on this thing, but I'm having to pay a bunch of taxes. It's like, anyhow, I was done with them at that point, except for the few that I'm stuck in, sort of thing. Okay, scroll down to the real world ETFs. When you talk about what you see on TV, those are actually the ticker symbols for the SPY, the Qs, and the DIA. So when you're looking across CNBC, that's what you're actually seeing. Advantages and disadvantages, we can put that at the top of the screen. The next headline there. Lower expense ratios than mutual funds for sure. Some of the expense ratios are down. If you get into the passive, down to the 0.04, 05, which is really that's fine. I mean, that's really paying nothing. You do have the active and passive. So if you have active, you're going to pay more. And like the 6 that we talked about earlier, those are all pretty active, which when you look at active, if you look at ETF.com, it will tell you what the turnover ratio is. And if the turnover ratio is over 100%, I think that's where they draw the line for considering it active. If you tinker, but you don't turn over the whole portfolio within a year, then I think you can be considered passive. So scroll up to put that activity versus passive equity at the top. Okay, at the bottom, you can kind of see through that. At the bottom, that's where I talked about the taxes. So it's on exchange traded funds. So if a bunch of money flows in, so this is kind of explains where individual names can get affected by the ETF. If a whole bunch of money flows into, trying to think of a good example, just pick one. iBuy, so Amazon. So if Amazon's on the move and it gets a big upgrade and a bunch of money's flowing into Amazon, then everything in iBuy is going to go up. So even if there's a terrible name in iBuy and you're trying to short it because it's just a bad company, just via the fact that Amazon got an upgrade, money's flowing into both Amazon, the individual stock, and iBuy, can pull your stock in the wrong direction. So you kind of like, what is going on? Who's buying the stock? Well, when people are putting money into that ETF because they want to hold Amazon, but they're also a little bit scared of individual stocks, and I get that, they're buying that whole basket. And so the manager of that fund, real time, and again, it's electronic, has to actually go out and physically buy that throughout the day. So it's an active exchange sort of thing. So that's where you can get ETFs actually pulling things up or pulling things down unfairly, is what I would have there. So scroll up. I think the ETF market impact might talk a little bit about that. The influence of ETFs, this is where you can hear, and I'll close out on this, is the ETFs and passive investing can be dangerous in the fact that the money that's going in to your to your 401ks and the TF thrift savings plan and all that is so heavy that it can artificially inflate a market. And that's why when you think of the standard P ratio for the market being around, 19, 20, and we tend to be up at 25 or so, it's because all this money is going in and it's passively buying everything. When you think of, what's going in monthly out of your paycheck. So when you hear the passive indexing bubble, that's what they're talking about. I still think it kind of holds, though, for a thesis, because people are going to continue to do that because people do save and invest. So I think that has inflated the market, but I'm not sure it's artificial. More to follow on that. But that's where we're going to close out for the day. So thanks for listening. A little bit long-winded about ETFs. There was a lot to cover there, and really we just scratched the surface. It was a good topic for a Friday. And with that, you enjoy the weekend, and we will see you back on Monday morning. Have a good one.